Welcome to our Expert Insights interviews here at Empower 2020, and I'm delighted to be joined by the Chief Product Officer at CSS, Ronan Brennan. Ronan, welcome.
Thank you very much, Emma. I'm delighted to join you here and discuss some topics on fund regulation.
Fantastic. Thank you, Ronan. Now, just to start off with, what areas are you looking at when it comes to monitoring the regulatory radar for funds at the moment?
So a couple of things. So we're generally looking at topics that are important for our clients and our target market as it exists today, but also looking deep into the future, trying to understand the challenges firms are going to be experiencing as that kind of wave of regulation washes up. So we're looking across the breadth of transaction reporting. We're looking at the reporting that investment firms and funds themselves need to file both locally, as well as at a supranational level, for example, like at an ESMA level, and looking at the kind of disclosure regimes that are emerging around costs, around ESG, in what I would call a pre-investment documentation that needs to go to an investor. So there's a range of topics that are particularly hot at the moment.
That sounds like an awful lot to cover. Can you walk me through the sort of changes you see coming in transaction reporting?
Yeah, so obviously this week and next, there's many folk on the buy side very focused on SFTR. It's going live, I think, Monday evening next week. We also have a lot of change potentially coming through on the back of MiFIR. We've already seen that there's a whole set of change in the data model changing under EMIR. And we've got Brexit to deal with. Brexit's probably one of the biggest challenges. We're going to see potentially bifurcated reporting. We're seeing kind of changes in the market around the trade repositories, around the different arms. There seems to be uncertainty around whether some will be operating in the UK market or not. And all of this is generating a lot of, I guess, challenge. And uncertainty leads to challenge and leads to anxiety within the marketplace.
And with everything else that's been happening in 2020, obviously Brexit hasn't been front and centre, but it is becoming that again now, as you say, and I assume it rears its head elsewhere as well.
Yeah, so it's a good question. It came up recently, about a month ago, maybe 2 months ago. Her Majesty's Treasury announced that they were going to take a slightly different path with respect to UCITS and PRIPS, and that's kind of created a wave across Europe and the UK. They indicated there was kind of three areas they looked at. They were going to look at maybe giving the FCA some power to give clarification on what is or what isn't a PRIP, I guess, directed at corporate bonds. They were going to look at replacing the performance scenarios with, I think they described it as an appropriate measure of performance. And they've extended or proposing to extend the grandfathering period, which would allow firms that produce a UCITS KID, a KIID today, to continue to do that for another 5 years beyond the EU slated grandfathering end date of 31st of the 12th next year. So that's kind of created a parallel regime now for both PRIPS and UCITS. Probably will benefit UK firms, European firms that distribute into the UK, which it's a critical market for European headquartered firms. That's going to create challenges for them. They're potentially going to have to maintain two sets of documents, a UCITS KID on one side, potentially a PRIPS KID on the other. So yeah, they
are the sort of clear and present challenges, if you like, but obviously layered on top of that perhaps is sustainability too.
Yeah, so again, that's coming really soon. So I think it's March 10th next year. We have the Sustainability Finance Disclosure Regime, or just the disclosure regime, as many folk call it. Firms are really under pressure to get ready for that. At another level, we're still waiting for the RTS. We're expecting it this side of the holidays. Could it come? There's some folk, there was discussion today, I think on Ignites, where they were mentioned maybe this will be delayed. All I know is firms are desperately trying to get themselves ready now. ESMA did release a discussion/consultation paper about a week ago. They attached some sample or proposed templates to that as part of the survey. Kind of give some insights into how they're thinking. I guess some of the challenges are that the rating, I guess the ESG rating space and the vendor space is quite different, and each vendor's approach is different. And one might argue that that's a good thing, especially when you compare it to, say, the credit quality market and how alike they are. But then the differences creates its own challenge. Yeah. So
Ronan, so much on the horizon. Is there anything else to watch for at the moment?
Yeah, there's quite a few things. So we noticed in the US, prior to Chair Clayton heading off to the New York Attorney's Office, he announced an update to the the fund shareholders disclosures, the prospectus documents that are issued to investors prior to investment and then thereafter, once a year thereafter investment. And they're looking to change that regime. What I would call the post-investment disclosure looks like it's going to follow a familiar pattern. It has, from a distance, looks similar in pattern to the KID. There's a similar approach to how the cost table would be disclosed. So we're starting to see, I guess, a convergence of these type of disclosures. We also see similar disclosures in Canada. We see similar ones in Hong Kong. We see something similar in Singapore. So yeah, this is, I guess, we're trying to also look at it beyond the European space, because most investment firms are global these days. They're operating well beyond the shores of Europe and the UK, as they look for greater breadth in their distribution.
So with all of that in mind, what would your words of wisdom be as we go into the end of 2020 and the start of 2021 now?
I think it's kind of going back to where we started. It's that, you just as we maintain a really kind of a long and short range radar, these firms also, the market itself needs to be not just worrying about what's in front of us right now, but we always need to be looking down the path. And that's where we invest very heavily, is in what we call our regulatory intelligence and our regulatory knowledge. And I guess that's what makes a RegTech is that deep investment. But yeah, it's keeping that long range radar finely tuned, looking at what are the things that are going to come and what's going to have a major impact on our clients and on the folk that we're looking to grow our business with, and ensuring then that we are as prepared as they are to address them as they come up. And that's it's a continuous monitoring cycle that it never ends. It's just something that we must do, and we must do so with great diligence.
A very busy man indeed. Ronan, thank you so much for sharing your insights.
Thank you very much, Emma.
Thank you very much.